Okay, great. So what we want to cover tonight are just two things. It may seem very kind of brief, but they're vitally important. Okay. So the first thing refers to maturing our trades. Okay. So I want to open it up here and kind of share something on the screen so you can see my demo page. I'm sorry, guys. I got stuff everywhere. There we go. Okay. So this is actually an example setup, but I want to show you guys how I am letting this trade mature. Okay. This is gold versus the US dollar. Okay. I felt very comfortable in this trade today. And I think I sent it on the video, just letting you all know, hey, this is one that I'm kind of looking out for. I think I did one on YouTube as well. And I knew the potential of this trade. Okay. So of course we let's go through our paces, right? We see the daily, we see the 4 hour. Okay. So we already low at the very least, we know this is what type of setup. Somebody give it to me right quick. At the very least, we know this is what kind of setup. Somebody type it in the chat. Anyone? B at the very least. Yes, sir. Yes, sir. I know y'all know what we're talking about, right? So at the very least, when we see a white and an orange arrow, now your color convention may be different, but white stands for daily time frame structure. Orange stands for 4 hour. Okay, in this world where we're all talking, so you may have a different color convention on your own. Okay, but at the very least, hold on one second. At the very least, we know that this is a B setup. Okay, because according to our grading system, an A is white, orange, and in the direction of the daily trend. That's an A setup. Okay, we established that, I think, at least last week, if not 2 weeks ago. And so when we have a B setup, it is that we're going in the direction of the daily bias as well as the 4 hour bias. Okay. So I knew at the very minimum, when I see white and orange, I'm looking at a B setup. Okay. That makes sense to everybody. Give me a 7. Okay. If it doesn't make sense, give me a 9. I wanted to do this for a review. Okay. Very good. I need to see as many 7s as we got. No pressure now. Don't try to conform. If you don't make sense, say, speak now, forever hold your peace. Okay. All right. All right. So we've got this established that we have this morning. I looked at this and I saw actually over the weekend. I saw that there was a B setup that was coming. Okay. So what I then do, I then go to the daily, right? I then go to the daily and I look for the overall direction that Simplicity says that this trade is in. And it is saying that it is a bullish trend. Okay. Well, you may say, well, Tony, look, it's looking like it's kind of sideways. Well, it is. You know, it's been in consolidation for a long time. If y'all see this rectangle here, okay. All right. And normally we don't mess with consolidation, but on the daily, I'll mess with daily consolidation because this is hundreds of pips here, hundreds and hundreds. Okay. So we don't mind doing that. But what we will do, what we've been doing, we've been taking the bias, the directional bias of the daily. And in that, we find hundreds and thousands of pips when we're doing the daily time frame. Okay. So this is where we are currently. So if I go back to the 15-minute, all right, I see a great setup here. So now I know that I have, it is the directional bias of the daily, the directional bias of the 4-hour. And now I'm heading in the direction of the daily trend. So this qualifies as an A setup. It doesn't get any better than this, guys. It doesn't get any better than this. So when I think A setup, and I want y'all to really wrap your minds around this. When I think A setup, I think something going from 15-minute to the 30-minute to the hour to the 4-hour to the daily. It's going to mature or matriculate through all those time frames. Okay. So when we think A setup, that's what we have to think. Okay. So we're talking about a move that could run for days. All right. These are the golden setups we look for, guys. Okay. Reason I say that is these are the easiest pips you're going to get in the market. All right. It's not going to be a whole lot of pushback. It's not going to be a bunch of deep pullbacks and all that stuff. You see, as you can see right here, this one went down well, but look at this pullback that came back. Okay. That's because it was ultimately going against the daily trend. Now we're with it and it should flow much better. Okay. And so I'm already in this trade with a mindset of, yes, I can get quick pips, I can get quick money, but I want to trade this almost like it is like in my IRA. Okay. Not exclusively, but I can nibble off of it for the day. I can do a day trade. I can trade like a 5-minute, 15-minute and get a little bit off of it. But I also am realizing that this thing is going to move. Okay. And let me show you all an example even last week. And this was going against the daily trend. All right. But let me go up like to the hour. Okay. And I want y'all to understand right here. This looks like this is where price broke on the hour last week. Okay. Okay, that's a nice little fall. All right. If you get in this is the place of entry right here, right? Let's measure this all the way down. This drop alone, guys, was almost 500 pips. Okay. That was over 11 hours. Y'all see the first number here. It said that the first number 11, that's how many candles it took to get there. It's 11 1-hour candles. It fell 500 pips in half a day. Okay. So when we have strong levels of agreement, now you have to understand this was an orange arrow by itself, but guess what carried over? This white arrow that has been carrying over the whole time. This coupled with that created this. Okay. So we have to be mindful, and that's the reason we need to let the arrows tell us the story. Don't come in with any preconceived notions. Don't look, oh man, it's got to do this. It's been, we can convince ourselves that this is a good trade. We can convince ourselves that this is going to be the one that's going to buy me the Ferrari, right? If we look at something long enough with enough emotion, we can convince ourselves of anything. Okay. But I want us to realize, let me get rid of this blue here. Okay, never mind. We have to realize that when we get setups like these are the easiest pips. And this was just, the daily and the 4. This was a B setup. Okay. So when you get a quality B setup, it will, when everything is right and the market wants to give it up, it will put you in a position where you can really maximize it. Okay. But I want us to start thinking more long-sided than short-sided. Am I trying to turn you into a swing trader? No, I am not. What I am saying is a lot of times we don't let our trades mature enough, and we go for it like we go for it for the like the microwave. Okay. I got 30 pips out of this. And nobody's saying don't get your 30 pips. Get your 30 pips. But you have to look, and I want us to start looking at the potential of trades for their long-term prognosis. Okay. And what I see here in this 15-minute, I see long-term strength and prognosis here. Okay. Because we have the daily, we have the 4-hour, and it's in the direction of the daily trend. Okay. So at the very least, and when you start to learn the market, that this looks like a nice drop here, but on a higher time frame, this is a very long candle somewhere. Okay. This is like 3 long candles on the 4-hour or 1 long candle on the daily. And what we know is, and just from my experience and being in the market a lot, this is a gap on another time frame. Okay. This is a huge gap, and price loves to fill in gaps. Okay. So my history in knowing the market, coupled with this, and knowing it's in the daily trend, I know that this is a trade that has the potential. I put it like this. If this trade right here gave up 500 pips and it was not going with the daily trend, imagine how many pips this will be when this fully matures. Okay. And reason I want you all to start thinking in that direction is so that you're not darting from this pair to that pair to that pair. If the mojo is with gold right now, and I'm not trying to give you all advice to trade gold, because gold is a different instrument, it's a different animal, and you have to know it. It's different from any other pair. But I'm just using this as an example. When you know that the hot hand is with a particular pair, why are you jumping over to other things for variety's sake? I don't like the licorice, jelly beans. I want to get the green mint ones. If the hot hand is with a particular pair, stay with that pair, because the market is determined. This is the one giving up pips. Y'all can go over there and for variety's sake, go with GBP USD and blah blah blah. But if the hot hand is with Euro Swiss, you need to stay with that pair as long as it's willing to give up pips. Because I tell people this all the time: your account doesn't care how the money gets there. Okay, I want y'all to listen to me very clearly. Your money does not care how it gets there. Oh, a lot of times we can do that stuff to make ourselves seem important when we're talking amongst our friends that don't really trade. Like, yeah, I trade, I trade 6 to 8 pair, I blah, blah, blah. But we could be making it harder for ourselves because you can only keep your eye on so many pairs. Okay. I was talking to a friend earlier today that we learned to trade together. And GBP, JPY, I have a love-hate affair with it, because it will just consolidate. And I looked this morning, and from Friday, it dropped almost 300 pips, like out the blue with no warning. It's one of those ones where you have to watch it, and you have to be studying it, and you have to know its movements and when it's ready, its temperament. But I was so busy kind of looking at some other things. Behind my back, it just dropped, and it just gave up loads and loads of pips since Friday. Okay. So the reason I'm saying it is I want you all to start scaling down. By this time, you've seen enough pairs and how they move and what's going on during the summertime, and things are seasonal, to kind of start knowing the temperament and the attitudes, I would dare say, of some of these pairs. Okay. And what best lines up with how you trade, what time you're going to trade, how often you're going to trade. Are you looking for something that's going to move steadily? Okay. You're going to move something that moves quickly. When we talk about ADR, right? Average daily range. Do you want something that moves quickly? Do you want something to move? Usually the things that move quickly don't pay the most. Okay. I.e. Euro NZD. It pays like $7 and something, or $6.93. Okay. But it moves like 300 pips a day. Okay. Versus Euro GBP, it moves maybe 72 pips a day, but it pays $13 a pip. Okay. So you need to start balancing out how I'm not going to trade everything. There are like 26 to 28 different combinations of what you can trade. Not even to mention indices and gold and crypto. When you add all that stuff, guys, it can be up to upwards of like 35, 36 pairs. Okay. So I think a lot of reason I've talked to some of you all and did some one-on-ones, and I think some of your frustration may be that you're missing things because your net is too wide. Okay. You're focusing too wide, and you need to narrow your scope as to what you're looking at. Okay. Because here's what I plan on doing on gold. Now, I'm going to just be honest. I'm trading gold long term, but I'm also going to day trade gold. Okay. I know the long-term prognosis is that it is bullish, that is going long. So it's probably going to go thousands and thousands of pips into, and going towards in the future. But I'm also cognizant of the fact that I can jump in and I can do a day trade on it if the directional bias is going backwards. Okay. It's going against. I will get in and ride that. Okay. There are people that are perfectly profitable, guys, that trade one instrument. I know people that only trade GJ, only trade GU, only trade gold. I have a friend right now that only trades US 30. Okay. And guess what? When they have that singular focus like that, you're not worried about all the news is going on. You're not worrying about all this, what's running today. Let me see what's hot today. And so I want us to kind of start, now that we've had a lot of time to kind of feel the market and see what does what, I want us to start narrowing things down for more simplistic trading. Okay. But I used to be like this, and I still struggle with it sometimes. If my particular pairs that I have about 4, 5, and some days they all make a decision that we're not doing anything today. So then the temptation is, let me find something that's moving, because I feel I have that itch to trade. Anybody ever been there? Put a 5 in the check if you ever been there. That I just have this itch to trade until I'm going to find something. Guess what? If you look in the market long enough, you will find justification to go get in something. Okay. And so we don't want that, guys. We don't want to put ourselves we don't want to put ourselves in those positions where we're getting outside of our discipline. Okay. Because here's the last thing I want to, and y'all say I've been preaching tonight, so I'm gonna get off a pulpit, but I want y'all to realize this is not a hobby. This is a business venture. Okay. This is a business venture. You are, let me see some names. David Brown Inc., Justin Avery Inc., Courtney Allen Inc., okay? Kurt Brown Inc., okay? LLC, whatever you want to put as the suffix. You are your corporation, okay? And let's take an example of restaurants, okay? I know we're all over the world, different places, but it's safe to say most places have a McDonald's, okay? McDonald's knows what their core business is. They know who their target audience is. And they are not going to start, frying like drumstick chicken. That's just not their core business. Could they do it? Yes. Do they have the capacity to do it? I'm sure they do. They make chicken sandwiches, right? But they're not going to get in the space of KFC and trying to do chicken breast and with all the potatoes and fixings and all that stuff. They're not going to get it because they are laser focused in doing burgers, doing convenient fast food. They got into the cafe stuff, right? They do the frappuccinos. We do quick breakfast. That's our core business. That's what we do. That's what we know we can be profitable in. This is our slice or segment of the market that we are going to excel in. Okay. If they were all over the place trying to do all the kinds of things, they could be mediocre at a lot of things, but great at none. Okay. And so what we want to start at, I want you to start thinking yourself as a business. What is it that gives me the highest probability to get the greatest amount of pips to give me profit in the market? That's all we need to focus on, guys. Okay. I know, and I've talked to at least 90% of everybody individually. Okay. And I know everybody has a plethora of reasons why you're doing this, to, you know, extra pocket change, to, you know, funding my retirement. I want to be a full-time trader so I can spend more time with my family. If that's the case, guys, we have to start treating it like a business. And most businesses, the most successful businesses, they have laser-like focus on what their goal and their aim is. Okay. So part of that is we're going to have to start narrowing down what is it we're going to trade, when we're going to trade it, how we're going to trade it. Are we going to scalp it? Are we going to intraday trade it? Are we going to swing trade it? Okay. And when I'm talking about this maturity of our trades, I probably will do some other things as they present themselves, but I literally can trade gold, I would say, this week and probably next week, with the trajectory that it's going to, that I project that it's going to go. I can trade all the different ways that I trade off of this and focus on this singularly. All these pairs down here, I could get rid of all of them and stay with just gold. And for you, it may be another one. But once you start thinking is, hey, let me find where the flow is and let me jump in that flow, because that's where you're going to find the easiest trading. Okay. You don't get, you don't get style points for how difficult the trade is. Like, this is not gymnastics. You don't get level of difficulty points, right? It's very binary. It's, did you win? Did you lose? Okay. And we are about getting the easiest pips possible. Okay. All right. The up and down gives good war stories, but it doesn't put any more money in your account. Okay. So with that, here's what I want to focus on. And then I want to show you guys this. 1 second. A lot of y'all been asking, and I found something. I've been scouring over trying to find something that was really going to work for everyone. So let me get this. Let me have that. And okay. And I'm going to pop this up in the chat for a little bit. So with that, we found a great, I don't know why it's doing that. Y'all see that? Y'all can see that? Give me a 3 in the chat, please. Okay, great. So I was looking at a whole lot of trading plans, and I want to try to find one that really fits. It can get trading plans can get very deep and convoluted, and I didn't want that. So I wanted to keep things very basic. Okay. And so we can determine already what our trade entries are. Okay. Now, with this, we're gonna walk through this for just a second. Let's walk through some of these questions. I'm sorry, guys. Give me 1 second. Something popped off. I lost my thing. I got too many windows open. I'm sorry. Okay. So the first thing is let's walk through this. What are my entries? Okay. Now, some trading plans get into all that and get into the minutia of, what is my routine before I trade? I'm going to brush my teeth. I'm going to meditate. Those are the personal things. If you want to do it, do it. Give me 1 second, guys. I got to plug up my computer. Those are the personal things that you can do. But for the purpose of our general conversation, we're going to talk about things that just pertain to trading. Okay. So what are my entries? Okay. And I'm going to upload this when we're finished. Our entries are our core basis is 415, right? So let's describe what that is. What is 415 strategy? The 415 strategy is a multi-time frame supported strategy. So right here, you would type in, I will only take entries. And this trading plan is like a contract with yourself, okay? So you're going to be saying, I will only take entries that are supported by the 4 hour. And you can put your definition of a C, A, B, and C. Okay, I will only take entries that are supported by the 4 hour. Or if you say, you know what, I'm not doing the C trades. I'm only doing B trades and above. I will only take trades that are supported by the 4 hour and the daily bias. Okay, which means white arrow, orange arrow. And you can type that because this is your contract with yourself. So you can describe it the way you want to. Okay. All right. Right here where it says, what are my exits? Okay. Your exit could be, I think Javon, I don't know if he's on here tonight. He got a behemoth trade last week, right? Well, he stayed in from white arrow to white arrow. I'm trying to build up the stamina for that. And he did it. Okay. It could be my exit is after 30 pips. Whatever your plan is. Or it could be whenever after the first impulse, when I see a significant pullback, I'm getting out. Okay. Then you can get in with it. Not, am I closing the whole position or am I closing half my position and letting the rest run? Okay. Right here where it says, what are my golden rules? Okay, that's you. Oh, that's you. Okay. Okay. What are my golden rules? Okay. Some of our golden rules are we don't chase trades. If something has left the station, we wait for the pullback. Okay. Your golden rules is, here's what I found. This is one of my golden rules. I have given in to the fact and the reality of I am not a good, my best time to trade is between 4 in the morning and 10:30, 11 o'clock. That's just me. I have enough evidence to know that when I see trades at night, they work out for me 15% of the time. 85% of the time, they do not work out for me. And so, and when I take trades at night, I don't sleep well because I got that trade on my mind. Anybody else like that? I'm thinking like, man, I wonder what that trade's doing. Oh, I wonder what. And so it's not worth it to me. Like I have literally lost hundreds of dollars overnight. And as soon as the New York market opens, I get it back just like that. But I'm frustrated because I'm glad I made my money back. I got back to break even for that day. But man, if I had just waited till my sweet spot when I take my best trades, I could have been that much more in profit rather than using the profit from those trades to get me back to break even. Okay. I found out that I was running in place. I found out that my best success was during between 4 o'clock and 11:30. Okay. So what are your golden rules? Okay. The golden rule is I'm not getting in anything. Exactly. I'm not getting anything unless it's a 3-to-1 trade. That's my golden rule. You have to have some non-negotiables, guys. Okay. I saw this morning, and everybody knows what happened in the market today with some real estate firm in China. That's what they said was the reason. To me, it was time for a pullback to happen because the indices have been going, they've been overextended. It was time for them to pull back. So sometimes I think they put that news out there just to give a reason for it, but it was time for it to pull back. I saw that coming. I missed my entry. Well, I said, I'm waiting for NASDAQ to pull back some before I get in. Because I knew all the technicals were there. It never did. It kept creating. It never made a lower high. It just kept going down. As much as I wanted to jump in and get some of that money, I've been there, y'all. It's almost like people like wait and say, hey guys, wait till Tony gets here. Wait till Tony gets here. As soon as I jump in with my trade, okay, let's make a U-turn. Let's go the other way. I have been bitten by that too many times. And so one of my golden rules is I just don't chase. I let price come back to me. Okay. Many of y'all may know how to use Fibonacci. Some of you, I'll draw up my Fibonacci. That's where it mathematically should pull back to. But if it doesn't do it, I've just missed that trade. And I was proud of myself today because I showed maturity in my trading. And I'm glad for people that made money today. I mean, some people made some money off NASDAQ and US 30 today. Just it wasn't me. I was fine. I made money off gold today. Okay. And so you have to be okay. Every dollar isn't yours. Every pip isn't yours. Okay. I want to leave, and I want to leave this section with this, guys. Sometimes not trading is still trading. Okay. We don't feel like we're trading unless we're clicking the button and we're buying or selling. But trading is knowing when not to trade, is using restraint. Okay. Now let's just kind of wrap our minds around that because I don't want us to feel this pressure of or this herd mentality. Okay. Because y'all see all these big drops. Somebody was the last person in the door before they took it up. And I've been that person before, and I don't want y'all to be that person. Like they waited until you got there and then they took it the other way. Okay. So what are your golden rules? Okay. The other thing is, what is your post-market routine? And I'm going to be honest, I haven't been the best at this. One of my friends, he's starting to do that, and he has started to do this, and it has exponentially changed the way he trades, and that is journaling your trades. Okay, journaling your trades, meaning I document every trade I took, what the pair was, what the price was, what my directional bias was, because this is all the stuff we compute when we take a trade, but to document it is another thing. Not only does my friend he writes all that stuff down, the directional bias, the price, the stop loss he chose, the profit target that he was going after, but he also has a section in his journal where he types the actual rationale for why he decided to take it. Okay, now that may seem like that's very tedious. It's a struggle for me. I'm going to be honest. But what he was able to do was he was able to look back at the trades that he took, and he saw some flaws that he was doing over and over again. He was able to document it, and now he's been able to fix that, and his success rate has gone through the roof. Okay, so what I want us to focus on is I want us to find us a good journal we can start using. I'm going to look for anybody knows of one, if anybody using one, share it with the group. That'd be great. A great journal so that we can start looking at what I call our pathology. what we do consistently over and over, looking at our habits. Okay. What we do habitually creates our reality. Okay. If just sidebar, one of the books that I read / listened to, had the audio book and the physical book, that started changing the way that I trade is Atomic Habits. Okay. I'll put a link in there to see who it's by. But Atomic Habits is that it's called, you know, the premise of the book talks about compounding. Like we compound interest, we compound improvement. And through that compound improvement that we get, our objective is to get 1% better every day. Okay. 1% better every day. Not in what a lot of us do, and I've done in the past. I want to get 50% better this week. And so I get discouraged because I didn't get anywhere near the 50% improvement. When the fact of the matter is, if we can do 1 degree of improvement every day, over time, the compound effect of that creates exponential change. Okay. And so that's a great book I would recommend. It's an easy read. It's also an easy listen. I need to listen to it again when I go to the gym. But part of our post-market routine is, what are we doing when we're done trading for the day? Do we just close the laptop, we turn off the phone, and do we just go about our way, or do we study what worked and what didn't work? Okay. Because here's what we want to do, guys. We want to highlight not only the fact that we won, but how we won and why we won. James Clear, that's it. How we won and why we won. Consequently, on the other side, we want to look at how we lost and why we lost. Okay. When we look at that and we put that in front of us, we can clearly look at, okay, this is why I won. And so I need to replicate this behavior. This is why I lost, and I need to stop this behavior. Okay. Yep. Atomic Habits. I need to stop this behavior. Okay. I got to the point like this, guys. I was getting winning trades, right? I was getting winning trades. But I was holding on to trades too long because I wanted to see a 4-digit win. I was in the 3 digits, but it was just my pride. I just wanted to say and take a snapshot. I want to take a snapshot that I had a 4-digit win, $1,200, $1,100. Well, in my quest to see that on the screen, guys, I'm telling the truth on myself tonight, right? In my quest to want to see a 4-digit win, so I could take a nice snapshot and send it to my trading friends, I didn't take the $750 or the $600 or the $400 that was in front of me. And guess what? It started pulling back. And then I end up closing, giving back a third because I wanted to scratch an itch of seeing a 4-digit win. Okay. I found that through looking at my trades and seeing the pathology of what I was doing. Okay. So it's not how much money, it's not how many pips you make. It's how many pips you cash out. Right. And so when we started seeing that, I was holding on to something too long, trying to get it to be too big and grand. I should have been closing out and leaving the runner. Okay. So when you journal, you kind of see it's kind of like going in for a physical. They take your blood, they do your body mass, BMI, whatever it is. And whatever, when you meet with a doctor, it is what it is. You can't hide from it. You can't, you can't gift of gab your way out of your physical. Your blood work is what it is. Your blood pressure is what it is, right? Your cholesterol is what it is, and they compare it against the standard. And so I want us to get in that mode of self-accountability, because these trading plans are things you're these are contracts you're gonna have with yourself. Okay, if you want to have a part, if you want to choose a partner in here to share with us, hey guys, you know, for accountability's sake, this is my trading plan. For somebody to hold you to it, I think that's a great idea. But at the very, it's kind of like a diet. Nobody's gonna know if you know you go by Krispy Kreme and just get one donut. Nobody's gonna know it, but you're letting yourself down according to your ultimate goals. Okay, so those are two things want to talk about tonight is letting those trades mature, having a trading plan, and then using a journal. Okay, so I'm going to drop all these things. Yes, I got you. We're going to go to question and answer for just a second. Okay, I'm going to open up the floor for any questions anybody may have, any trades you want to look at. What I do want to do first is acknowledge Mr. David's question. Okay, questions that he sent me, and he sent me these on Telegram. All right, and I should have printed those out. Okay, so hold on. So he asked a question, and this is going to be my topic of study next week. So here's the first thing. He asked, would it be feasible to have two trading accounts? One trading account for short moves and another account for longer moves. Okay. And he was talking from a standpoint of when he qualifies for a fully funded account. But let's talk about just in its general scope. Okay. Is it best to have just this like slush fund account that we trade different ways out of? Or is it best that we have segregated accounts to trade segregated ways? Okay. I've done both. Here's what I found is most effective. Having different accounts for trading different ways. Okay. Because when you're trading, let's say you're swing trading, you're doing long-term trading, there is a higher chance and a higher propensity to have large drawdown. Okay. And so the beauty of that is when you have a dedicated account to do swing trading to hold drawdown, you're not worried about it. Okay. But if you then start taking large lot sizes, if you're scalping, okay, you're talking about eating up margin. You're talking about potential higher level of loss. You could put both styles of trades at jeopardy if you lose your scalping trade, or if you take a high volume trade that eats up a lot of margin, it could put your whole account at jeopardy. So for that reason, if you're going to trade two extreme styles, now if you're doing maybe an intraday and a day trade, those are kind of really kin to each other a little bit. So you might could do that. But when you're on opposite extremes, I would suggest trade two different ways. Okay. And he asked it specifically as it pertains to funded trading. Okay. So we're actually going to focus next week on funded trading and how, and really the methodology of what I've been having you all to do, doing the 1% risk, increasing, it is really gearing us for that. Okay. So let me look at his other question that he had. Give me 1 second. Okay. He talked about having a wealth growth plan for optimizing your funded account. So far as setting a budget for cash withdrawals, reinvestments, creating yes. Okay. So here's my short answer to that, and I'll get more in depth with this next week. When you're doing a funded trading account, you do have to go in with a plan. Okay. My ultimate plan for me is to fund my own personal account to the point where I don't need a funded trading company. Okay. I want my fund to be so large to where I don't need them. Okay. Because the premise of funded trading is you're using somebody else's capital, and then you're getting usually a 70 to 80% split, which is great. It's like 80% commission of what you win. But realizing like, oh, well, if it's 70% split, every time I'm winning with these people's money, it's 30% that I'm not getting, which, if I had my own money at that level, I'd have all of that and keep all of that. Okay. Also, there are different tax implications when you're doing funded trading than when you're doing your own. Okay. Of course, it's not your money at risk. So therefore, with losses and things of that nature, you don't get the benefits of it. Okay. Also, whatever you win, it's given to you in the form as like a contractor. It's 1099. So different tax implications. So whatever your preference is. But yeah, I do go in with it with my trading. I do go with various goals. I have several funded trading accounts that I trade different ways. I have one that I trade long term. I do, and that's all I do it for. I have one that I do my little intraday stuff. I have one that I can do a little scalping in. Okay. And I think that's the best way to do it, and the best way to kind of disperse. And it scratches my itch if I want to do a particular one, because last couple of weeks, particularly in August, doing long-term trading, it was a horrible market for long-term trading in August. Okay, but it was a great environment for scalping. Okay, so that's what I did primarily. I did short scalps and like kind of small intraday trades. Okay, and I got my pips and kind of got out. Okay, and so I have various accounts for that. Okay, so thank you for those questions, Mr. David. And like anybody else having those like, throughout the week, something peaks in your mind, just feel free to ask a question. Okay. Okay. Brahim, I'm going to go ahead and do you want to type it, or I'll unmute your mic if you want to give an audible question. Go ahead.
Hello, Tony.
Hello.
You hear me?
Yes, sir.
You hear me?
Yes.
How are you? I have only one question. You know, a lot of people with Uncle P, sorry, and with you, I think they don't trust the system. You know, you created. They believe that the trust in your signal. We have the same signals at the same time, but we don't have self confidence, you know, to trade it. And I think it's a basic question. But what is your advice for your new customer who didn't trust the system, but they trust on you, you know, on your signals?
Great question. It's going to come with a lot of back testing. I'll be honest with you. It comes with a lot of back testing when you see the repetition of what happens. And I'll tell y'all this, the same thing happens a lot of times. If you just draw back like on an hour time frame and you put the day separators up, I think we did it a couple weeks ago. You'll see the same thing that happens usually the same time, the same day of every week. Okay. And I had that problem of trusting the system. Okay. And the reason being, and again, this is not talking about Uncle P or anything like that. He's a brilliant man, created a brilliant system. But as a person who is creating their own trading, at least indicator, if not system myself, I am creating it out of my stream of thinking based upon how I'm wired. Okay. So it's kind of like, everybody loves to wear Air Jordans or whatever your favorite, basketball player's shoe is. But what people find out is they made those shoes, while you like the way they look, they may not be the most comfortable, because, it dawned on me one day, they made the shoe for Michael Jordan. It was for his comfort. It was for his body type. It probably felt great to him, but some of his shoes don't feel great on my feet because they were made for him. Okay. Same as it is with a lot of trading systems. A lot of times people create things out of the need that they have to see the market the way that they see it. Okay. So what I'm saying is that's the reason I had to go out and grab other things to make it make sense to me. And then when I started putting it out for people to see, like, wow, that's the way I see it too. Okay. So yes, systems are there, but you have to understand it the way that you see it. And until you see it, and that's the reason it did not click for me when I first became I was with Triple Arrows at first, and then I became with Simplicity. I saw other people making profit, but I didn't see it that way. Okay. And so it didn't click with me until I found these pivot indicators that gave me further context that let me see, okay, that's the reason I need to wait. Okay. Then me waiting, now I see what these moving average cross. Now I see that it doesn't come back. Okay. Now it fits my my temperament. It fits how I'm wired. And so now I can be successful with it. Okay. So I think that comes with time. I think it comes with back testing. You know, again, I think I told a lot of people individually, but it did not click for me until, with me, guys, I was losing money. I was being unprofitable. I kept feeding my account, kept feeding my account. It was not until the end of last year, I took 4.5 months off from live trading. I went in demo. I took 4.5 months off. Okay. And I treated my demo. I didn't take $10,000 trades. I didn't take 10 lots and just let it run so I could see it go up to $50,000. I treated it like it was my real account. I was feeling the same emotions. I was feeling the same stress. I was celebrating when I won. I was down. I became my demo account. Okay. I took it serious. And I started back testing, and I took things apart. I put it back together until things made sense to me. Okay. And it may require that you physically have to do that, guys, in order for it to work. Okay. And Javon, you're right. Practice. Okay. But proper practice. Okay. You know, my old piano teacher just say, you know, practice doesn't make perfect. Perfect practice makes perfect. Right? Do I use simulators? No, and yes. I don't use an MT4 simulator, but I will. I do have a TradingView account. I have a pro account with TradingView. Okay. And with TradingView, it has a playback feature that you can go back in time and replay anything in history. Okay. And so that's a fast way as well. Okay. To where you can see, okay, this is a rejection of structure. I see this candle do this. This is where I would get in. And then this is where, you know, I would see, has anybody not seen that before? Would y'all benefit from me showing you that real quick? Okay. Let me show you. Let me show you this right here. Can y'all see that? All right. So let me take all this stuff off. All right. So this is the TradingView version of my moving average. Okay. I know some of y'all might saw that when I sent a screenshot of gold this morning. Okay. Let's look at GU. I don't know what it's going to do. So what you do, you hit this right here. Hit this right here. That's the playback feature, right? So what I do, I normally scroll it down keep myself honest. So I don't know what's going to happen. I scroll it down and I just go to the left, go to the left, go to the left, go to the left, and I'm gonna hit me a random place in time. As y'all can see, I didn't see any candles, right? So now this is giving me current price action, and I can see. So what I can do, I can then, you can have this thing go tick for tick, and it will just paint them. So I'm just going to, let me increase it. All right. So I can see, wait until I get another signal to see what it does. Man, that would have been a good one. Man, that thing went. Good night. So I'll do this. And you see all these lines I drew up. This thing is respecting these levels of structure, right? All right, so let's stop right here. So we have an entry right here, right? I might have been a little late. So let me, we already know where this is going to go, but let's. Hold on, give me 1 second, guys. Can y'all see that? So it says buy right here. This thing right here says it's broken in the positive. So what I could do is, this is a position calculator. I can say I'm going to get in right here. I'm going to put my stop loss underneath here. Okay, 53 pips. And I'm going to look to the left at these levels here to see where price has been before, to see where I could possibly find a target. Okay, so let's just say we're going to go right here, 127 pips. Okay. And I'm just going to simply press play to see what it does. Come on, go, 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 go. Okay. So I'm going to call an end to that trade. I didn't get 127 pips, but I did get 109. Okay. Y'all see that? And so you can just do that. And let me play a little more. I think it might end up breaking through here. Yep, it would have hit my target. Okay. And that's based on me looking to the left and seeing this line right here. I lined up a place where price has been before. It may have took a little longer, but it ended up hitting my target. Okay. Okay. So do y'all think that would be something that would be helpful? So that is a part of TradingView. That's a part of TradingView. It's part of the pro plan. Okay, so you have to pay in order to get that feature. But that's a quick way. That's a quick way to test your theories. I've heard about that too. FX Blue Simulator. I haven't used it, but I think you can try that actually on MT4. But that's a quick way where you can just test your theory, and you can write down what your success rate is. Okay, you say, hey, I believe I'm looking at this, on this time frame when I see a correlation between that, and you can see how it's going to play out, and you can do it fairly quickly. Okay, you can do it with various pairs, but that's one thing I did to kind of test my theory. You can do it, and you can do also you can do the strategy tester in MT4. I'm not very proficient at it. It's kind of very archaic, but it does work well. There is a strategy tester that when you have certain indicators, and maybe I'll try to find a video on it on YouTube and paste it on here so you can do it. I'm just not very proficient at it. Okay. But you can do that. All right. Javon, yes, sir. I'll open up for you.
You hearing me, Tony?
Yes, sir. Go ahead.
All right, great class, sir. Good class. I agree with David, you know, you're playing with our emotions. You're testing us.
Guys, it won't be long, I promise.
All right. You can go back on goal, please.
Go ahead, go. Yeah. Hold on, let me. Yes, sir.
Your settings for your SNR. Can you go on it?
You mean the white
Yeah.
and the white and the
Yeah.
yeah, this is just I think it's just standard
Sure.
daily and 4 hour. Now these green and red, these are simplicity, support and resistance.
Oh, man, standard and it's not lining up like yours.
Yeah, it's just standard. Now, this may be I think it should be fairly the same. Now, these are mine from my system. I had my developer to make it, so it may be a little nuanced. But on yours using the SNR, do you see daily and a 4?
Yeah, I have the daily and the 4, but the all right. For goal.
And I'm on the
4.
15-minute.
Yeah, I am on the 15 minutes as well.
Are they more spaced out?
Yeah, and the 4 hour came before the daily.
The 4 became 4 day. Oh, that's interesting. Okay. Yeah, I had my developer develop me one and put a little more sensitivity to it. So that may make the difference.
Oh,
But is it you got me interested now. I'm gonna pull it up to see how different it is. But are they mainly telling the same story though, that you could tell?
slightly.
Just a slight difference.
Yeah.
Okay. Well, I'm gonna look into that. I want to make sure we got apples to apples. But I told them to, you know, calibrate some things and add some extra sensitivities in it.
So they change the settings in it.
Slightly.
Oh,
So, but you all will get it.
okay.
I make sure you all get mine because I want everything that I'm creating is designed to work together. So I don't want us to be hodgepodge, you know, putting pieces together. I'll make sure y'all get it everything I got.
All right, cool.
Okay. Anything else?
Well, so when you say again?
When is it again?
Yeah.
I'm seriously, guys. I'm looking at October. There are some licensing things, and here's the reason. I want to make sure it's a very smooth process for all end users. And this is no shade on Super Easy, but that process of getting your license and all that stuff is just painful, and I don't want that experience for you all or anybody else that may be interested in the indicator. So it's not as seamless as I would like it to be yet. So that's the only thing holding us up. So it's going to be automated that when you purchase, you'll get an email, it'll download, a license will already be connected. Bam, you'll be up. that's how seamless I want it to be. I don't want a whole bunch of tech support, calling somebody trying to set it up on your computer. You know, that's just a headache. And so that's the only thing that's holding it up, but we're just about there.
All right, cool, cool. Sound good.
All right. Thanks so much, buddy. Hey, and congratulations on that great trade last week, man. You held that thing from white arrow to white arrow, man.
Thanks.
Yeah, very good. Anybody else? Anybody else? Hold on. Let me end this and then I can see everybody. Hold on, let me read what's in. Yeah, quite possible. Go ahead, Brahim. You had something else. Go ahead, sir.
You hear me?
Yes, sir.
Yeah, I just want to thank you, Tony, because I try a lot of funding account, and I was, I think, minus 4,000 just with I used only price action, and when I coming back with your system, I recover all my loss in 1 week only with fourth trade. It's crazy. It's crazy. Your system is only crazy because I never see that, you know. And I want just to thank you because now I trust in myself and I'm more confident to be funded, you know, with your system.
Wow, man. I appreciate that, man. That's humbling. I really appreciate that feedback.
Yeah, that's all. I just want to thank you.
You're welcome. You're welcome, man. And thank you for saying that. That's encouraging because sometimes you're kind of doing stuff and you think it's making an impact. So that's and the rest of the community and class needs to hear that too. That this works. It's not just magic that's working for me. It works for everybody, y'all. We just got to be committed to and be patient. Okay. Thanks so much for sharing that. Anybody else? Awesome. Well, guys, have a great night. I'm going to be posting these things with the it's going to be a PDF of the trading plan. Also, I think I have a trading journal that we can drop in. If anybody else has some, there's no particular one, just whatever suits your particular desire. Okay. Guys, have a great night. Yeah, go ahead, Kurt. Go ahead, sir. Hold on, let me see if I can. Go ahead.
You can hear me?
Yes.
Oh, wait. Let me turn off the other mic. You can hear me now?
Yeah, I got you. Yes, sir.